And bring on board Sachin Shah, the fund manager at Emkay Investment Managers, to talk fundamentals. Hi Sachin, welcome to the show. We were just hearing Shyam Shekhar talk about being more bullish on Bharat rather than India, and rural facing companies and rural facing businesses is something that even you're very bullish on. Could you talk to us a bit about which are the individual sectors that you think are the biggest beneficiaries? Of course, we've seen autos do very well in the last few months, but FMCGs on the other hand have had a mixed bag of numbers as far as the rural recovery theme goes. Which are the sectors that you are most bullish on, which could rise further on back of the rural theme?
See, if you see we just got almost done with the Q4 results earning season, and one clear trend that has actually emerged hearing most of the market, hearing most of the management commentaries, has been that the rural demand is actually coming back. The trends over there are much better now as compared to what we see after demonetization, after GST and all of that. So things have clearly settled over there, and the aggregate demand from there seems to be really coming back. From that and of course we also know the kind of the government push that we will see, or we have been seeing in the last few months now, and it should probably continue even further. So from that perspective, we strongly believe the rural facing companies should do well. The sectors that we really like in that space is auto sector. We believe, if you see the monthly volume number trends from the auto sector within each of the sub segments, has actually done very well, and we believe that the demand from the rural side for this for each of the sub segments, whether it is two-wheelers, four-wheelers, it could also be three-wheelers, actually all of them actually are doing quite well. So, and even tractors. So we strongly believe that the auto sectors, and particularly the companies which are more rural facing, should actually benefit as we go ahead in the next 12 to 18 months.
Hi Sachin, this is Nantara joining in from the New Delhi studio. I don't want to talk about sectors. I have a very different type of discussion I'd like to have with you, and that's the large caps versus the broader markets. I think that's been the theme that we've seen now for some time as well. If I look at the BSE 500, more than 65% of the stocks are trading below the 200-day moving average. Give me an insight of what fund managers like you are doing. Volatility is here to stay. 2019 general elections are coming up. Inflation is going up. Crude oil is on the boil. Are people like you maybe rejigging portfolios in favor of large caps? Do you think there's more pain that lies ahead?
Well, you are right. So for the last 4 or 5 months, what we have seen is that markets have almost actually gone nowhere, whether it is large cap, mid cap, small caps. But of course, you are right that overall in the mid cap and the small caps case, we have seen some bit of extra selling. But that's if you see 4 or 5 months back, most of us were actually talking that the P ratios, the valuations of mid caps and small caps are actually much higher, much out of the margin of safety zone as compared to the large caps, and that's probably the theme that is playing out. We've also seen in the earnings season where quite a few mid caps and small caps have actually not played out the way people were anticipating, right? And of course, we also had the technical factor of a lot of large mutual funds wanting to realign their portfolio as per the SEBI new regulations, and that's why we are also seeing that some bit of a liquidity squeeze in each of those counters, I would say. So there are multiple factors which have played, but I think most important thing is that when you have a situation where the oil prices have gone up by 15%, where your currency is getting weakened, and it's not only about Indian currency, it's about dollar actually strengthening because of the higher interest rates in the US market. So it's clearly some bit of a risk of trade. Now in that situation, there is always flight to safety. So a lot of investors would like to rejig their portfolios, move out of the mid cap and small caps, particularly the investors who are playing for the momentum, particularly the investors who are playing for just next 2 quarter results and trying to flip. So those kind of investors will actually trying to move out of the stocks, and the momentum just goes off. But if you really think about it from a very long term perspective, if somebody's if investors have to be here for 3, 5, 10, probably even longer years, these are the situations where actually the opportunities get created. right? This is the time when actually your purchase price get very, very attractive. So if one believes in businesses, if one believes in those managements, uh, these are the times when actually one gets those opportunities where your margin of safety is high, and
Sachin,
over a longer period of time you can actually make
Sachin,
very,
this is
very
very
good returns.
generic. Come on, yeah, listen to what I'm doing. Sachin, this is very generic. I'm asking you very simply. Is this the time to maybe exit small caps and mid caps simply because a lot of experts believe there is more pain that lies ahead, and maybe, you know, all the money that a lot of people have made in the bull run in the last couple of months, if not years, may be set to change, even if it's a short-term phenomenon, and then therefore our fund managers also rejigging their portfolios like that?
So you're right, it completely depends, right? So as I said, that if you believe in your companies, if you believe those results will actually, those companies will perform over a longer period of time, I don't believe that one has to just sell off the small cap and mid cap at this point in time for large caps. In fact, we are also seeing a lot of large caps which are now also trading at 50, 60, 70 Ps. So it's not going to be easy to even make money over there. So it's and you know, mid cap small cap investing has always been a bottoms up approach. So if you look from that perspective, I think it's very, very company specific that one has to really look at. And if one has invested with the next 2, 3, 4, 5 year perspectives and one believes that the cash flows of these companies are going to be strong, I don't see a case for somebody to just sell small caps to large caps because of the trend.
Let you go on that note. Thanks much for taking time out and giving us your perspective on the markets at large.